Hi, everyone. Thank you so much for joining. Welcome to our Financial Clarity on Autopilot webinar series. Today, we're going to be covering the topic how to master your cash flow without becoming an accountant. Firstly, I'll let you know that this meeting is being recorded, so you can rewatch it later. And also, if you have any questions throughout the webinar, feel free to drop them in the chat box below, and we'll make sure to answer those when we finish the session at the end of the call. So I'd like to introduce you to our speakers today. We have Chase Fan, who is an accounting team lead here at Awesome. And we also have Sangeeta, who is an accounting assistant team lead also here at Awesome. So on today's agenda, we're going to be covering a few topics. We're going to be covering why profit doesn't equal cash and how this trips up even growing businesses, the 3 pillars of clean books, how to avoid spending phantom money that doesn't actually exist, the 3 reports every founder should understand, and a deep dive into compliance in Hong Kong. So before we go ahead, I'd like to know, how do you feel about your company's cash flow right now? You should be able to see a poll in the chat box. So please pick one of the options and let us know how you feel about it. And without further ado, we can get started. I'm going to leave it with you, Chase.
Okay, thank you so much, Maria. My name is Chase. I'm actually from the Awesome Limited as the accounting team lead. So basically today I'm going to cover 2 topics. First of all, I'm going to talk about what's the differences between bookkeeping and accounting. And then second of all, I'm going to talk about what's the 3 pillars that we think is the most important thing for the clean books. So first of all, when we talk about bookkeeping and accounting with someone who is not from an accounting or financial background, usually they will think these 2 things are actually the same, which is not. There's always one big confusion for the people that might think bookkeeping equals to accounting. But in our perspectives, bookkeeping is more like an input method and accounting is more like an output method. What does that mean? So that means when it comes to bookkeeping, we usually talk about the supporting documents from the daily operations, such as receipts, invoices. We always talk about the historical data, everything that has happened, has incurred already from the company business or daily operations. And all the supporting documents is meant to be kept for 7 years by law in Hong Kong, for example. And when we talk about accounting, what does that mean? Usually it's more on a strategic decision-making basis, something that's related to taxation. How do you actually optimize or minimize the tax payables of the financial year for the company? And something that we try to forecast or do the budgeting for the next financial year, something that you will be forward-looking. So after that, how do we get clean data for the company? If let's say if I'm a business owner, if I own a company, if I'm planning to open a new company in Hong Kong, how do I get all this data clean and so then I can get the best financial information? So here are 3 pillars that we think is the most important things for generating a clean books or like bookkeeping. First of all, we have recording. Recording is pretty much how do you input all the data into the accounting system. And then after that, what happened is reconciliations. After you record all the informations into the system, then you need to reconcile these expenses, for example, or the sales revenue with your bank transaction. After the reconciliation is done, then it will go to the reporting, which is the most important pillar of the having clean books. And then we will be also looking into details in the next few slides of these 3 pillars. So first of all, before we talk about the recording, there are at least different types of expenses that we might need to think about because it might have impact on the tax implications. First of all, in the first scenario A, we have team meal as the staff welfare. For example, part of the sales team might go have a team lunch as team building in a restaurant in Hong Kong, which we can categorize these expenses as staff welfare, which is 100% deductible in Hong Kong. And scenario would be the sales team might need to meet the clients for lunch and try to close a sales deal. Um, this could be something that we call entertainment expenses. It could be deductible, it could be not. It depends on whether we can have the supporting document like the receipt of the expenses. What if we cannot provide it? Then there might be a risk of flagging to the IOD that this is something that we cannot deduct from the company's expenses. And in some cases, some of the companies, they might put some expenses into an account called sundry account or a suspense account. All the expenses recorded in these two accounts, sundry or suspense account, don't feel like you can get rid of it or like get away from the auditors. You probably won't, because most of the auditors, when they see the accounts like this, they will definitely go and check into it and see whether you can provide a supporting document, or they will ask you, for example, if there's like 10,000 Hong Kong dollars recorded in this sundry account or suspense account, they may ask you, what is the business nature of these expenses? And if you cannot provide a supporting document, or if you cannot explain into more details, then they might not let you to record these expenses under the company's book. Instead, they will rather book this as the director's money, like the directors owing the money to the company. So this is something that you might not want to do as a business owner. And go back to the three pillars of cleaning books. The first step is recording. Thanks to the artificial intelligence these days, we successfully shift from the paper form into the digital form. What does that mean? That means these days, most of the business owners, they don't need to do lots of like paperwork data entry anymore. Instead, they can just use the phone, which is one click away from bookkeeping, because by just taking a photo of the receipt, they can easily send all the informations from the phone into the accounting system, and the accounting system can automatically detect all the informations of the transaction. For example, the vendor's name, the amount, the transaction nature, and the date. So all these important details will be captured automatically by the system into the accounting system, and then it comes to the next step, reconciliation. So after you took all the information from the receipts into the system, what do you need to do? The next step is you need to reconcile all these transactions with the bank statement transaction. But sometimes it's not one equal to one. For example, in front of us, you will see on the left side, you might see there's 10,000 Hong Kong dollars showing on the dashboard, but there's only 8,000 showing in the bank statement. Why is that? Why is there a gap in between? Where's the missing 2,000? This is something that we call phantom money. It could be caused because of a bounce back FPS transfer. It could be because of the MPF opto debit hitting tomorrow, or maybe it's something that's pending in the credit card settlement, or maybe it is a check that hasn't been deposited yet. So this is why it is very important for the company or the business owner to do the reconciliation for matching your transactions with the bank statement. And there's a little tip that we will suggest to our clients or business owners. When we do reconciliation, you are strongly recommended to do it on a weekly basis or monthly basis. Do not wait until it is too late, just to avoid the transaction amnesia. Yeah, so you don't mess up with your financial books. And then the last pillar of the having clean books is reportings. So this is the most important pillar of having the clean books as a business owner. I would say why? Because by looking at these financial information, for example, on the balance sheet, as a business owner, I will be able to see how much money I'm owing the vendors, or how much money my clients is owing the company. And also maybe what kind of fixed assets that I'm actually owing to the company, and how much money the company has lent to the directors as directors loan. Like all this information is pretty important. And also from the profit and loss statement, obviously you can see the financial performance of the company. For example, how much revenue the company has generated in the past 6 months or in the past financial year, how much expenses that will be deductible from the sales revenue, and how much it ended up with the gross profit or gross loss, how much tax I'm actually paying. Just a side note, in Hong Kong, there's actually two-tier profit tax rates. If the company is making um, accessible profits that's below 2 million Hong Kong dollars, that will be charged at 8.25%. And if it's over $2 million, then that will be, whatever the balances will be charged at 16.5%. Okay, and then the last statement that we all can look at is also the cash flow statement. So this one is not the most common statement that most of the company will have, but it's also one of the essential statement we should always look at. Why? Because in the cash flow statement, it will be separated into three different sections under operation, investment, and financial. So by looking at these three different areas, you can it helps you or the business owner to track all the cash movements. For example, you might be able to know, by the time of like today, by the time of today, next month, would you be able to have enough money to pay your MPF contribution or your salary? So this is really important for the business owner to read it, to look at it, and also it helps them to do the budgeting and forecasting for the next 3 months, quarter, or maybe the next 6 months, or maybe even the next year. And just keep that in mind. Profit doesn't actually mean cash. These three financial statements will help you to think about what's the most important thing that you are going to be doing for your company and improve the financial structure or information, and also to maximize the revenue or income of the company. And then here are three challenges of clean books. Apart from those three pillars that we talked about before, there's still something else that you might need to worry about as a business owner. After having a order bookkeeping done, then you might need to do audit after that, because this is a compulsory regulated by the Hong Kong government. All the companies registered in Hong Kong, they will have to have audit the report and then submit it all with the profit tax return to the IRD. It could be a complex process, which may slow the fundraising. So we strongly recommend our business owner to get the bookkeeping done as quick as they can, and then get the audit done in a shorter time, so then they can have the audit report earlier and submit it before the deadline to the IRD. So then they can have the report earlier for the investors or shareholders to look at, to help them to finalize the business decision making. And then the second one is company secretary obligations. That might add layers of admin. So in Hong Kong, there will be a series of companies registry documents that a company will have to renew every day, such as annual return, business registration certificate, and if you want to add or remove a director or shareholders of the company, there will be like some sort of documents that you need to submit to the company registries in Hong Kong as well, which may add some expenses of the company, and also it will take some certain part of time as well, and you might need to think about that too. And the last one would be strict bank account opening procedure. So some of our clients might not be in Hong Kong. Even if they open a company in Hong Kong, they might not be physically in Hong Kong. It could be a challenge for them because some of the traditional banks in Hong Kong, for example, HSBC, if you want to open a new bank account, business bank account in Hong Kong with HSBC, it might not be a wise decision because they don't take clients anymore. Definitely, if you're not physically in Hong Kong, even if you are, you still need to go through lots of paperwork and applications and lots of documents that you might need to bring in to prove them. To show them the financial information of the company first. So this is something that you might need to think about before if you want to run the business yourself. Okay, so I think that's it for my part, and I'm going to pass it to my colleague Sangeeta to talk about the next few parts related to the compliance in Hong Kong. Thank you.
Hello everyone, nice to meet all of you. My name is Sangeeta. I'm an assistant accounting team lead from Awesome. So now I'm going to present about compliance in Hong Kong. So the company registry, CR, and the Inland Revenue Department, IRD, these are two big bosses in Hong Kong actually. So these are some of the few deadlines that you cannot miss actually. Number one is the mandatory provident fund, which we need to pay to the company's employees. Contribution need to be paid 10th of the following month, and if we don't pay, there will be a strict penalties will be applied, and there will be no excuses where we can escape from those strict penalties. Second will be the annual return. Annual return is a document that verifies your company details with the company registry. Uh, the annual return need to be updated within 42 days of your company's anniversary. In failing to do so, there will be late fees penalties that the company registry will impose to us actually. The third one will be the profit tax return. It will be usually issued in April of each year, and the deadline for the filing of profit tax return, it will be based on the company's financial year end. So for example, M code for the company that having financial year end from January, February, and March, the deadline will be on the same year of 15th November. And end code means for the companies that have FYEs from April until November, the due date will be 2nd May of the next year actually. So for the D code, the final one will be the company's FYE, which is on that falls on December of every year. That one, the deadline will be 15 August of the next year. So there is like sorry, I missed one. For as a side note, Hong Kong does not have any VAT or GST, but we still need to prove every expenses to auditor. So as all you guys heard, like there is a heavy set of compliance that we need to follow in Hong Kong. So what is the solution for it? So this is where Awesome comes in with Awesome accounting software. So with Awesome accounting software, we already automated the process of bookkeeping and tax filing. So you will get, if you have receipts or invoice, just take a picture and upload to our efficient interface, and we will handle all the recording and the filing to the tax authorities. So with Awesome, you will get a clear real-time view of your finances and track your income and expenses. Plus, you could reduce your monthly operating expense. In addition to that, leave it to us to handle your accounting task from processing documents to generating tax report. You will never miss a deadline with Awesome's compliance calendar. Lastly, you will get a dedicated accounting support right at your fingertips, no matter where you are in the world. You can get a quick answers and personalized guidance from your dedicated Awesome accountant via live chat. No endless email threads. And that's all from my end. I will now pass to stage to Nuria.
Thank you so much, Sangeeta. Thank you for sharing all of these insights, Chase and Sangeeta, with us. So before we go ahead into the Q&A session, just quickly wanted to let you know that we are here if you want any help with anything accounting related for your business. If you'd like to learn more about our packages and how we help with accounting in general, feel free to book a free consultation call with our team, and they'll be more than happy to help you. You should be able to probably see a link in your screen at this point. So make sure to click there if you'd like to learn more. And now we are going to move on to the Q&A session. So we already have some of the participants that couldn't make it submitted some questions. But if you have anything that you'd like to ask, any questions about what Chase and Sangeeta just presented, or just in general, feel free to drop them in the questions box below. In the meantime, we can start with the questions we already have from other participants. So I think we can start with this one. So the question is, how often should founders realistically review their cash position? I invite Chase and Sangeeta to come join me, and I think, Chase, you might be the best one to answer this.
Actually, there's no an actual planning. I think maybe usually when they do forecasting and budgeting, I think it's more on a monthly basis or maybe a quarterly basis. It really depends on the business operation and also the business nature. Because in some business industry, there might be depends on the business needs. It could be, like, for example, if you are working in a fast-paced fashion industry, then you might need to, obviously, you will have um, better cash flow and like inventory and stuff. Then you might need to check it on more regular basis. But if you are doing just like a SME smaller business, then maybe you can just look at it on a month basis, or quarter basis, or even semi-annually basis.
Thank you, Chase, for answering that. Let me quickly check. So we have here another question. I think this might be good for maybe Sangeeta to answer. So it's, what should I prepare before switching my accountants?
Okay. In the case where you guys are planning to change accountant to another accountant, I would say the basic things that we guys have to prepare is the latest management report for the financial year end, and I would say we have to make sure we have the auditor report of the last financial year, so we can continue the bookkeeping process for the current year onwards.
Amazing, thank you. Okay, we have here another question. What financial signals should founders look at before hiring or investing in growth?
I think the financial signals, what financial signal founders should look at before hiring and investing in growth. I think pretty much they would definitely need to look at the company's financial statement, like what I have just gone through, the pretty much the balance sheet, and also the profit and loss statement, and also the audit report if they have it. Because if you don't look at it, you don't know what the financial condition is like of the company. And by looking at these, you can actually see if the company is making any profits or loss, and you can there are like different types of ratios that you can also look at from the financial statement. But I'm not going to go into like too much details in it, because it's going to be like a few hours section if I do. But yeah, there are like different types of ratios that you can check it out, and also look at if you would like to invest in a company in growth or hiring. And if you have a chance, if the company, if you you are thinking about that you might want to invest in, then you can also try to do some background search online and see what is this company like, where is it from? Is it like a family-owned business, or is it like a business that's founded by different companies from different professionals?
Okay, awesome. I think we're gonna do one more question, and then we are gonna end. So Sangeeta, I think maybe You might want to answer this one. So we have a question that says, can the historical filing be done without disrupting current operations?
Definitely, the answer is of course. Um, we can actually work on two financial year bookkeeping concurrently, actually, without each FYEs affecting each other, actually. So this simple. The answer is yes.
Amazing. Thank you. We've actually received an extra question. I don't know if we have time to answer it.
Okay, basically, registered address means it's actually basically where the company got incorporated, actually. So the business actually different, business address is actually different than registered address. So basically, the business address means where the business are operating, where the company is operating. For example, a company can be operating in New Zealand, but the company can be incorporated in Hong Kong. So those are two different things. For example, if you want to portray that very clearly to your customers or government, for example, in sales invoice, whenever you're issuing sales invoice to customers, you can always put your business address under your company name, actually. So it will show the customers that the company operates in New Zealand, but the registered address in Hong Kong.
Amazing. Thank you, Sangeeta, for answering that. Thank you so much for joining us today. It's been a pleasure having you here joining us. And if you still have any more questions, feel free to book a call with our team, like we already mentioned. You can also follow us on social media at We Are Awesome, where we share daily business advice as well as relevant events. So thank you again so much, and hopefully we'll catch you in the next one.